Hello and welcome to Sonny's Coffee Company Financial Overview. Today I'm going to go through our Excel workbook and let you all know everything and anything financially speaking for Sonny's for the current and future, as well as 5 years down the road. So to start, Sonny's Coffee Company will be officially starting in April of 2024. We have 3 product lines that we will be going over, as well as percentage of sales will be made at 25% for credit. Some other brief overviews will be, we will be starting with a cash balance of $160,000 from investments and a loan. So we move on to our sales projections. Again, our 3 product lines: food, non-alcoholic beverages, and alcoholic beverages. To start, we have a 5% rate of growth per month. We felt that that was modest, but then also extremely achievable in this market and with our unique ability to tap into the coffee drinkers for the morning hours and early afternoon. But then when we transition to Mooney's and we convert the company into a bar, being able to tap into that demographic as well. So broken down per month, this is the transactions. For the month of April, our first month, we're projecting 1,700 transactions of food for that first month with a unit price average of $8. And we are really going to be pushing multiple food items per transaction. So again, this was per transaction, our unit volume, not per food item. If we come down, and then you'll see that our net sales will be $13,000 for the month. And then we have a 20% cost of goods sold. Again, that's a little bit lower than the average, but with our outlook and our relationships with vendors and distributors, and then really focusing on getting a lot of local ingredients, we know that we'll be able to have a lower cost of goods sold. So then our gross profit for the first month from just food will be roughly $10,000. If we come down to non-alcohol, so again, that's kind of going to be our bread and butter here. That's why we have more transactions listed. That's going to be our coffee drinks, our smoothies, espressos, anything, again, non-alcohol related. So we have 1,950 as our projection with a unit price average, again, across all the different items as $7, bringing us to a net sale of about $13,000, and then gross profits again around $10,000. Alcohol, little lesser volume because we know that those are more expensive, and starting out we'll be probably primarily known more as a coffee shop, but then as we grow, our alternate ego of Mooney's will definitely pick up, and so that's why we kind of have a lower projection for our alcoholic beverages of $1,400 with an average price of $10, with more liquor drinks being a little bit more expensive, and then draft beers, wines being a little bit cheaper. And that gross profit comes to about $10,000, almost $11,000 because of the higher unit price. So again, these are our 3 product lines, and we go into a little bit more detail of breakdown of each different food items, non-alcoholic, and then alcoholic as well. So then we scroll down here. This will show our gross profit and our net sales for that first month. Net sales about $40,000, and then our total gross profit of $31,000. And again, we're going to show a steady increase over our first year with an ending balance of $505,000. We think that's a really modest projection, but then also something very achievable for us. And if we scroll all the way, so after our end of the year 2, will be almost at $1 million, we'll be at 930,000. And then if we go all the way down to our 5th year, we're looking at $3.1 million. And again, these are all very modest projections that we will easily reach and most likely surpass. So that's our sales projection. Again, we have a 5% increase with a 5% increase in transactions, 2.5% taking into consideration inflation. That's pretty standard. And then we've also set 3% for returns and allowances. You know, people not liking their food, drinks being spilled, that sort of options. Now, if we come over to our inventory, our items are broken down a little bit more. So we have our food items. We have our loaded toasts, our fruit parfaits, muffins and cinnamon rolls, and then our prepackaged granola bites. And these show just a modest inventory. And then as we grow in the year, our inventory will definitely be picking up as much as we're purchasing to meet that demand. For our non-alcoholic, we have our espresso, our smoothies, coffee, and then coffee beans, which would be selling by the bag as well. Again, gradual increase because we're keeping up with the demand. And then for alcohol, draft beers, bottled beers, our signature cocktails, and our seltzers. And again, a gradual increase to keep up with the demand of our projections. For our capital expenditures, we have projected to spend $20,000 on an initial renovation of the facility before we open up. So that is here, and the value will remain. It's actually modest, and that renovation will probably add to the value. So we just put that as $20,000 for our salvageable value. Our equipment is pretty vital and key to our operations. So we have our espresso machine, all of our kitchen equipment, coffee maker, coffee grinder, chairs, and tables. So we plan on spending $20,000 on our espresso machine. We really want a nice high-end one because that will be used very, very regularly. Our kitchen equipment as well. Not that we're making gourmet meals, but we need to have everything in the kitchen: oven, refrigerators, stove tops, cooktops, in that. And then our coffee maker, again, we're going to make sure that we have a very nice coffee maker, nice coffee grinder, and then chairs and tables. For our computer hardware and software, we have our POS system. So that's going to be how we charge people and keep track of all of our sales and inventory and payroll, as well as our management computer for our managers. Phones for our telecommunications. This way we have the ability to call out, but then also take calls for to-go orders. For land, we'll just be leasing, so we won't be purchasing anything as far as the land goes. For our staffing budget, we are going to have 7 full-time employees. So that's going to be our president, our vice president, our sales and marketing, our secretary, and then we have 3 other members listed as other. And these are their varying salaries. Our president's going to be roughly around $70,000 for the year. Our vice president around $60,000. Sales and marketing is going to be around $40,000, as well as the secretary. And then the average of our other 3 is going to be around $50,000. For our part-time and hourly employees, we're going to have 12 of them, averaging hours of 22 hours per week. And then also at a rate of $15. And that's going to increase as the years go by as well to keep up with inflation. So if we come down to here, our grand total cost for our salaries and our part-time employees is going to be around almost $44,000 per month. So if we go to our marketing budget, since we have a marketing manager, the budget itself is going to be a little bit lighter because there'll be a lot of those costs will be built into what our marketing manager will be taking care of on a daily basis. But we will have a graphic web design that we will be spending a lot of money on, as well as some marketing and PR consultants. We will be also heavily invested in Google and Yelp advertising, as well as, again, our website. And then also something that doesn't show up on here, but will be a lot of just local events in the community that we will be organizing and running to grow awareness of our business, but then also the community as well. Pro services. So we'll have an attorney just on speed dial per se, and we projected to spend about $20,000 per year on that, as well as a technology consultant for anything as far as POS system, computers, and then potentially any of the equipment as far as the coffee and kitchen equipment goes. So $20,000 for attorney fees potentially, and then $5,000 in a month or a year for just fixes like that to go with our computerware. Capital investment. So our president and vice president will be putting some money in to start the business. Maddie, our president, will be putting in $65,000, and Justin will be putting in $45,000. So it's coming out to $110,000. For our loans, we will be getting an SBA loan of $50,000, loan period of a year at a 7.75 interest rate. So we felt that between that loan and the two investments from our president and vice president, that'll be a great start for us and a great cash balance, starting cash balance to really make sure that the company starts off on the right foot. For our income statement, if you come down to our net sales, again, we had gone over this, $40,000 for net sales, and then our gross profit to start is around $31,000, with our expenses to start being a little bit more than our gross profit, and the expenses is going to be $53,000. So our net profit for the first few months, for almost the first year, will be negative. And that is why we had that initial investment of the $160,000 to get us through this first year, as you'll see in our cash flow statement. But we will start turning a profit in March, and then from there on out, we will be in the green, as you say, with our projection transactions going up as we gain more and more interest in the business. For our cash flow, again, our total cash receipts to start will be $191,000. That's with that $160,000 in the bank from our investments and then our SBA loan. So our ending cash balance for that first month is going to be $190,000. And as we go, it will decrease, as I had said in our income statement. But as soon as we get to our first year, we do start turning a profit, and that is reflected as our ending cash balance each month will then increase. So if you look at the ending cash balance at our end of our first year, it's roughly $69,000, which is a good, healthy amount for the first year of business. And that can definitely enable us to tackle anything that may come up in the future. And then also plan for unexpected things as well. And if you go to the end of our second year, our ending cash balance will be will be roughly around $400,000. Again, a very healthy increase, but then also still just modest projections as we grow the business within the popularity and just become more recognizable in the community. And then by the end of our fifth year, we're projected at $4.2 million. So that allows us a lot of opportunities to potentially expand the business, maybe open even more locations. And then really it just sets us up for a great, great future for Sonny's and Mooney's. Come over to our balance sheet. Again, here is our balance sheet. For that first quarter, this is broken into quarters. So first quarter, we're at $247,000 again, positive. We do go down, and that was based on our cash flow and our income statement that I had showed you. So $190,000 then to $152,000 for our third quarter. And then our fourth quarter of our first year, $135,000. And then here we break it down per year. And then we're going to go back up. Again, at the end of that first year, that's where you're going to see the increase in our cash flow. So at the end of the second year, $410,000, end of third year, $1.4 million, and the end of fifth year, $3.9 million in total liabilities and net worth. And again, that'll be around the time that we'll need to do some upgrades as far as equipment goes. So we'll have plenty of money in the bank, as shown on our cash flow, to make those upgrades to our equipment, replace some equipment that has been used up, as far as like any of the kitchen, the coffee equipment. It'll be a great time for us to refurbish and to keep relevant within the community. Now our break even. So each for that first year, it's going to be around $69,000, and it's going to go up from there. 71,000. These are monthly averages, and then broken down here in the fourth year, these are quarterly averages. So $220,000, $225,000, and then the yearly average in year 5 is almost $1 million for our break even. And again, we will be hitting that plus some. All right, now if we take our look at our first year financials at a glance, you'll see the 3 different color columns are going to be gross sales in the blue, gross profit in the red, and then the green is going to be net profit. So again, as I explained earlier, our net profit to start is going to be in the negative. But as we build that transactions, build that popularity within the community and within tourism due to our location, by the end of our first year, we will be turning a positive net profit. Then our net sales, again, they will continue to grow. Again, a very modest projection between our food, our non-alcoholic, and our alcoholic beverages. For our 1-year cash flow, again, because of that great investment to start of $160,000 from our president and vice president and our SBA loan, we'll start off here, and we will have a gradual decline as we use all of that money up and wait for our transactions to increase. But by the end of the year, we will start turning a positive ending cash balance and really start to project forward and up. So net cash flow in the blue, and then ending cash balance in the red. So if we come to our second year cash flow, again, just a continuation of the last graph that we showed, all positive and trending up. Then if we come over to our 5-year at a glance. So this again is going to show our gross sales, our gross profit, and our net profit. Gross sales in blue, gross profit in red, and then net profit is in the green. So first year, second year, third year, fourth year, and fifth year. So by that 5th year, our net profit will be approaching $4 million. Really, again, a modest projection, but a great outlook for Sonny's and Winnie's. And if we go to our 5-year net sales for our 3 product lines, which in the future, hopefully we'll be expanding those, tweaking them. We definitely do seasonal items as well. So these can fluctuate throughout the year, but this is going to show the average. Again, positive, modest projection forward. So thank you, everyone. This has been our Sonny's Coffee Company Financial Outlook. Again, we really have a great business that we are hoping that you will be a part of moving forward. And I know that our financial outlook here is a great start to show you exactly how Sonny's will be profitable, will be successful company, very, very soon, thanks to the great plan that we have put in place, and then the great management and leadership that we have hired and will be using to push the company forward. Thank you. Bye.